The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here back to the Diagnostic Trading Hour at TFNN. Thanks for joining us. You can join us on Tiger TV over there on TFNN. It's channel 7 for archives as well. The Diagnostic Trading Hour. Make sure you listen to us online at tfnn.mobi on your phone. tfnn.mobi. And just checking some things out, looking at the market. We got the S&P down 5 points, the Nasdaq down 6. We got the Russell down 6 points, and the Dow down 4 points. Right now, edging right up on settlement, so we'll see if decides to go ahead and break on through. Silver is currently down 1.41, so a massive move on silver there, along with copper. So down 0.0835. We got corn down or up 4.5. And we got soybeans up 6.75. Euro dollars down 7 ticks. Pound dollars down 28. Aussie dollars down 33 with the euro yen down $1. Pound dollar is down $1.20, or pound yen is down $1.29, and U.S. yen is down 70 pips. U.S. Canadian is up 42 with U.S. franc down 15. So the dollar overall sort of showing some weakness despite the weakness in the market. And we got the whole market confused. I was talking a little bit earlier today on the Bull Bear Binary Hour. Tommy is going through, and I haven't found it yet. And I'm not saying it doesn't exist, but again, I have not found it. And I'm going to keep looking and seeing if I can find another time when we broke this record. But we had 14 days of consecutive down-up closes here over the past 2 weeks. We just finally decided to start breaking that record. Market couldn't quite find any more buyers above the market. And, of course, there's always buyers, a buyer for every seller. Was having a hard time finding, again, buyers above the market. And it finally it went up here and basically, hesitated out. Finally decided to break right through, but then gave a lot of that back. So we'll see what happens when it's all over. But, market's really trying to figure out if there is a continued reason for this rally, which the fundamentals say no. But you know what? You gotta trade the charts. So to keep following those charts, keep trading those charts, and charts are king when it comes down. I know Tommy likes to say King Dollar, but we also got king charts too. So follow those charts along with the King Dollar, and you ought to be good to go. But right now we got the S&P. Like I said, working on it. Let's go ahead and let's check out where those indices are across the board. And let's see here. We got the S&P. It's moving back up, trying to get back up to settlement. And we can go on over and look at several of the indices. And you can see it had that gap right there. And Russell was able to fill that, or Dow was able to fill that right away. It just now started breaking into some green territory. And giving credit on to Angie there. She just said, we're going green. So she got a green right there on the Dow. We'll see if it's able to continue breaking on through. We also did get the close there on the 10-minute bars over above the deviation level. But we'll pull that up here in a minute and see if we can move those stops on up. But we did get the 10-minute close above the deviation, which is settlement for this deviation. And looking at the Nasdaq, it went down, it flew up, and basically filled the gap on settlement. I'll bring up the settlement charts here in a minute so we can see that in a little more accuracy. But it's trying to get on up there in positive territory. And the Russell, of course, working on it as well, but not near as resilient as the Dow, the Nasdaq, and the S&P has been so far. So the Dow really being the leader on getting back into that positive territory. As we can see over here on the charts, it is the only one right now that is up 2 points on the day. Now, if you have any questions, feel free to give me a call right now. It can be about your stocks, ETFs, futures, forex, position trading, intraday trading, Nadex binary spreads. You can always call in on our host line on any of our shows right here at 877-927-6648. Again, that's 877-927-6648. So with that, let's go ahead and check out. We always check it out every day. Let's look at the news, fundamental government announcements to see what's been going on and how that's been impacting the market. And as we know, we had Cyprus do a gold sell-off, and when they did that, everybody decided to, join in with the party. But let's go ahead and see what else we have on the scheduled impacted announcements that happen on a regular basis. Last night, we didn't really have any kind of news trade per se. We did have the Bank of Japan's Governor Kurata decide to come out and, make a little speech. And let's see, on that, he spoke at the Yamori International Economic Society in Tokyo. And that's not a whole lot to say beyond that. And he basically went into quantitative and qualitative monetary easing. So, feel free to, look that speech up if you want to know more about it. And then this morning we had 8:30, we had quite a few USD reports come out, and they basically all came in at negative. The core retail sales high impact report came in at negative 0.4 versus an expected negative 0.1. PPI came in at negative 0.6 versus an expected negative 0.2. Retail sales came in at negative 0.4 versus 0. And the core PPI came in at expectations. The FOMC member, let's see, Rosengren, so he had a little speech right there. He had delivered opening remarks at Fulfilling the Full Employment Mandate, Monetary Policy in the Labor Market Conference, hosted by the Federal Reserve Bank in Boston. That happened at 8:45. And then we had the 9:55 preliminary University of Michigan Consumer Sentiment Report, which also came in worse than expected. Starting to actually get some pessimistic outlook there. Came in at 72.3 versus an expectation of 79.1. And it hasn't really hit much along the lines on that. Basically, it hasn't went positive very often in the last 6 months. So it's only went positive 2 out of 6, looks like so far. And before that, we had a whole string of positive announcements, but starting to trend back towards the downside. And let's see, at 12 o'clock, so right just an hour ago here, Bernanke also had a speech. He went out and did the Resilience and Rebuilding for Low-Income Communities. It was a conference sponsored there by the Federal Reserve in D.C. So, that's just the main announcements that came out. The tradable one was the USD reports that came out, and you could have traded, say, USD yen on core retail sales. You also could have traded indices. I went in on a USD yen trade, basically right there on that trade. I called that one out, and looking at that trade, and it basically got out right around break even on the trade. So it wasn't a substantial market mover in and of itself. Now, let's see, what fundamental reports do we have that you can get ready for this coming week? So, pulling that on up, looking at it, let's see, Sunday, Kurata is going to speak again, the man that keeps on talking, and he's going to speak at a branch manager meeting in Tokyo. And then China is actually going to be releasing its GDP quarter-over-year statement. So that ought to be could easily be an impactful event on Sunday evening that, you could look to be trading, or if nothing else, just be aware of the bus coming so you don't get hit by it if you're an evening trader. And let's roll on in to Monday. Monday, man, he's all over the place. Kurata's going to be talking again. So this guy is aggressive. Like I said, he makes Bernanke look like a Boy Scout on his quantitative easing measures that he's put into place. And he'll be speaking at the 80th Convention of the Trust Companies Association of Japan, again in Tokyo. And let's see here, moving on down, the monetary policy meeting minutes are going to come out of Australia. So that is a potential trade on Monday evening. And you can go back and look at what's been the impact of the policy meeting minutes. Aussie hasn't been a big mover over the last couple weeks on most of its reports. So you definitely want to look at, the impact on each of the actual Federal Reserve, announcements to see what kind of impact could the meeting minutes have going forward. Now, if something comes out that's a big surprise, that could be a trade you want to check out. So anyways, but just, be aware of that. That one is coming out 9:30 on the Aussie dollar on Monday evening. Looking on over at Tuesday, we got CPI year over year and PPI input month over month, along with RPI year over year, core CPI year over year, HPI year over year, and PPI output month over month, all happening on the British pound at the same time at 4:30 a.m. on Tuesday. That should be a decent market moving event, just having that many announcements. So you could look at, doing a pound yen trade or a pound dollar trade right there. Euro will also be releasing its heavier impact, basically the most impactful zoo economic report. The German zoo economic sentiment report will be coming out. And it's basically they surveyed German institutional investors and analysts, 275 of them, to find out basically, what they think about the 6-month economic outlook for Germany. Germany being one of the largest, if actually the largest, economy in the EU, obviously having a high impact on the euro dollar when that report comes out at 5 a.m. So that's one you could look at. Bank of England will also be releasing its inflation letter sometime. It is not scheduled at a certain time on Tuesday morning. And then we'll go in, we're going to have a USD CAD lineup, and I love it when they line up. We're going to have the manufacturing sales, foreign security purchases, and building permit. Actually, those are going to be Canada's trades. And then we'll have building permits and core CPI and CPI and housing starts coming out of the USD. Since we get a whole lot of our lumber from Canada, then building permits and housing starts also affect the CAD. So that's a great lineup right there for Tuesday morning for the USD CAD for a possible news trade on that. And when I trade, either you trade the news, and the way I trade the news, I trade it on Nadex. I trade Nadex spreads or Nadex binaries, usually focusing on the spreads, because if a trade doesn't move as far as I expect it to, then a lot of times I'm able to get out that break even, versus on a binary, doing binary strangles, a lot of times you'll end up in a net loss. So I like to focus on the spreads using the spread scanner. You can get access to that over on our website at tfnn.com. And it makes it very, very easy to trade the spreads. You can go right in, and you can choose USD CAD right there. And once you choose that, then it'll pull on up, and you're able to easily see all the spreads. You can even narrow them down and say, you know what, I only want one-to-one risk-reward spreads, and I don't want to risk more than $100 a spread. And then it'll narrow it down and show you basically all the spreads you can choose, and you can choose one that you want to use for buying, one that you want to use for selling. So if I'm looking at this, I could easily just go, you know what, I like that one, and I like that one. And if that doesn't line up for me, I go, you know what, I really need that, those to touch right there. So that way I get maximum profit up and down versus losing money and making money on the way down. So those two together would actually make a better spread for me. It makes it very easy to see on the risk-reward graph up here. And then from there, you just click on the buy button, and it'll open the ticket for you right there in the Nadex platform, and you can submit it. So it makes it very simple to also execute the orders as well as find the best spreads to trade. Let's go ahead and check out what else we got going on for the rest of that week, and we have a few different things coming up. Like I said, you got USD CAD 8:30 on Tuesday morning, and then we'll roll in. If you're a New Zealand dollar trader, just be aware CPI is coming out quarter over quarter at 6:45 p.m. on the New Zealand dollar. And if we roll on into Wednesday, we're going to have the claimant count change and the MPC meeting minutes happening at the same time, along with the unemployment rate coming out of the British pound. And so be aware of that. And let's see, the minutes will also include asset purchase facility votes and interest rate votes. So both of those things are coming out within the MPC meeting minutes at 4:30 a.m. for the British pound. So that's another straddle trade you could check out over there on Nadex. And then going on into 10 a.m., we're going to have 1, 2, 3 high-impact Canadian reports. We're going to have the monetary policy statement, the rate statement, and the overnight rate. So they're releasing their report and their statement and their rate all at the exact same time, with a press conference coming up at 11:15. So that could give you a couple different ways to trade it. We'll talk about that when we get back from this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Just checking out what all's going on in the markets at the moment. And going through next week's trades. We're talking about some of the lineups that are coming up. With the reports on Friday. We're going to have the Bank of Canada monetary policy statement, the Bank of Canada rate statement, overnight rate, and then the press conference at 11:15. And so that presents sort of an interesting, I guess you could say, challenge, because you probably are either going to want to do it, you're going to have to choose because you have to get in before the announcement comes out. So you're going to have to go in and actually choose to do the Bank of Canada monetary policy statement before, obviously, 10 o'clock, which means you'll have the 10 o'clock, the 11 o'clock, and the 3 o'clock expirations that you can choose from. Obviously, the 10 o'clock you can do any good because the news comes out at 10 o'clock. So your choices will be narrowed down to 11 and 3. I like 11. I have no problem with 11. So the only issue I have is that press conference comes out at 11:15. So you really do want to look at the two possibilities there of the 11 o'clock expiration and the 3, and if you can get the 3 o'clock on for just a little bit more, because you have some premium in there, if you can get them on for just a little bit more, they may be worth it, simply because you have that press conference that, let's just say, the statement itself doesn't cause the big impact. You might be able to take advantage of the press conference impact, which could help carry you the rest of the way to get your trade to a profitable, or possibly, help you get out of break even if needed on the trade. So just be aware of that one for the Canada trade next Friday or next Wednesday. And then let's see here. If we go on over, we look check out Thursday. We're going to have retail sales over on the pound at 4:30 a.m. That's been a pretty good mover. We're also going to have the Spanish 10-year bond auction coming out at some time on Thursday evening. So as we get closer, they might be able to actually post a date or a time on that. We'll see. A lot of times it's just as the results come in, they come in. And then we'll have unemployment claims on Thursday as well. So depending upon if the market actually gets some volatility going, keeps moving, we might have a decent trade right there. And then we'll have the Philly Fed Manufacturing Index coming in at 10 o'clock. Both of those trades could be USD yen trades. And again, you could be looking at more of a 3 o'clock expiration, so that way you could use both of those impact reports to possibly help you out. Or you could trade each one of them individually. You could choose the 10 o'clock one. If you do get a nice pop, you only have 30 minutes till expiration, or the 9 o'clock one. Sorry, so if you chose the 9 o'clock expiration on the 8:30 report, you only get 30 minutes, but you get it really cheap. So you might be able to really get in and get out fast. If you choose the 10 o'clock, you do have more time, but you're going to pay a little bit more for it. So just, different things to consider. And the spread scanner, of course, makes that a whole lot easier, because when you go over here, you can pull up the different reports and you can see, which ones, line up with, what you're interested in doing for the trade. And you can go, okay, well, what's the risk on this one, and what's the risk on that one, And like right now, if I look at this, the 2 o'clock right here, we'll check that out just to give you maybe an example. And there we go. Okay. So like on this 2 o'clock one, I'm going to be risking basically $15. On the 3 o'clock one, I'm risking $20. So that's an extra $5 to have the additional time. I'm not really looking at the reward, because that's maximum reward. All right. And since it's maximum reward, then I don't plan on holding it to the maximum point. When I'm doing news trades, I plan on getting out at 1-to-1 on the trade. So that's something that you can do right there. Is you could look at that guy. You know what? I'm not looking for maximum reward, so not my trade. Now another maybe interesting way to trade these, to check it out, if you want to really lower your risk down, and check this out. It's a little bit different concept. But you could actually combine two different spreads that expire at two different times. Again, we're not worried about max reward, so don't worry about big triangle, little triangle over here on the P&L graph. Look at how far would it have to move for you to profit. So on this one, basically I got to make $5 above where I bought it, plus the $5 of risk, plus another $5. So 15 pips above where I bought it. So 1.0143, add 15 pips to that, and I'd have to get out at 1.0158, and that would give me a 1-to-1, or 15 pips below this side would give me 1.0102. So 15 pips down to the downside. So I got 0.18, 0.12. Now what would happen if I added on this spread right here? Okay, that gives me a little more lined up triangle with that. I'd have to make 10 pips plus 5 plus 10. I'd actually get 25 pips above 1.0143. So I'd have to have a larger move to the upside. And then to the downside, I'd need 10 plus 5 plus 5, so 20 pips to the downside. And so, you may end up finding out, just by combining them, you can start looking at one point, can I get a 1-to-1 risk reward on this? And by putting those pieces together, you can find your best spread. Now, you can always go simple and just make them line up as well. So, whichever one works best for you. But there's multiple possibilities, which makes it very cool. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I'll go through and check out some deviation levels right now. And we got the markets, moving, shaking, and just, generally just doing their thing. But go ahead and look at the Dow right here. And we got the Dow. It's moved on down, filled in that gap pretty quick. It was one of the first ones to fill the gap in right there with the, actually totally filled in the gap. Pulled back down, went back up, and it's really using that settlement as a resistance level. So I'm seeing that probably across the market's going to have a hard time breaking out and maintaining new highs for the day. So I got the Dow right there, and if we were using the 10-minute deviation stop method, then what we'd have is basically, let me add that on, I'll show you. Let's see, let's go in here, just throw a little drawing tool on my chart, makes it a little easier for the show here. And so if we're using that method, basically what happens is the 10-minute bar that closes above the deviation level, that's where we put our stop. So right here is where we'd have it. And it came on back down and hit that level. So, if we were long on the trade, that's where we'd be looking to get out. Doesn't mean we couldn't get back in. Doesn't mean we couldn't take another long. It means we're going to be looking at it for potential shorts, and we're going to be cautious on longs. Biggest thing is it's more about taking profit than it is about anything. But you're just getting that oscillation right there between the two. Sort of getting a swing trade really between the half deviation and settlement price. If we go on down, but they definitely took out the stops on that one. So big run right there. If we go on out and let's check out the S&P. where it's in at right now, and you see it pulled on down to 0.5, 0.7, one deviation, a perfect one deviation drawdown, pulled on back up to the half deviation. So it basically also got its half deviation run back up like the Dow. After it decided to stop moving down, it did a nice little retracement there, and like I said, just paused and hesitated right on the half deviation mark. And then if we scroll on over and check out the NASDAQ, on the NASDAQ right here, fell down. It didn't quite, technically fill the gap, so came really, really close. And anyway, so on that pullback right here, okay, it's going on down, pulling on back, and hit the one deviation mark. Again, we expect that 70% of the time, we expect the market to hit one deviation. Or maybe I guess a better way to put it is 30% of the time, we don't expect it to exceed a deviation. So that's probably the more accurate expectation. So it's not simply about an expectation of what it will hit, it's about an expectation of what it won't exceed. And that's really your biggest edge in using the deviation levels, because it's expansion. How far should it expand? So it expanded down, it stopped right there at the one deviation, pulled on back, hesitated at 0.7, hesitated at 0.5, still trying to go up and fill in that settlement price, not able to do it yet, but it is working on it. We go on back, let's check out the S&P. So on the S&P right there, we got to move down 0.5, we got S&P already. And let's check out the Russell. So over here on the Russell, we got to move down from 0.5, 0.7, and again, one deviation. Perfect move, pulled back half a deviation. And, it was shooting up. It was going really fast. A lot of times the Russell will fill first, but it actually avoided the high or the settlement price by a couple points. And notice I do use settlement price. And a lot of people, they don't know what that is. They're not familiar with it. It's not the same as the last trade on your chart. And so let me go in here. I'll show you this, and I'll make this a regular chart right here, just regular trading hour. So we hide the extended session, okay? And use a Ninja Trader right here. But you can see, if we look at this, that sometimes it lines up, and sometimes it doesn't line up with the last trade on your chart. Let me make this a little more visible for you. So right there we got 945.2 settlement of the previous day. On that day, lined up perfectly. But sometimes settlement and last trade on chart are going to be different. And settlement is the important number. It's how they base, margin, how they base mark to market, how they decide if options are in the money or not when exercised. So different things like that. It's a very important number. And settlement on the futures market is where they take on most of the markets, you have to go and you can read the individual rules, but on the major indices and the CME at least, like ES and stuff like that, they basically take the trades from the last 30 seconds of trading, and they take the volume at every price that was filled in the last 30 seconds. So let's say 1,000 contracts are filled at 1 and 2,000 filled at 2, on down the list. And when they get all that and they put all those pieces together, then what they're able to do from there is then they sum them up. And let me see, I think I even have an example inside of our website of this. It makes it visually at least make a little more sense if you are watching us over on Tiger TV. And let's go over here to diagnostic deviation levels. Down here at the bottom, I give an example of what is settlement. And so like right here, I got a list of 6 different prices that the S&P traded at in the last 30 seconds of trading. And then I have the volume that was filled at each one of those prices. Okay? So I take the price, like say 1,400 times 7,000, be 9.8 million. All right, though. So 1,400 times 7,000. So that actually gives you the weighted value of every price level. So you take that weighted value, you sum it up, that gives 37 million. And then, well, how many contracts were traded in the last 30 seconds? Well, 26,500. So we take that sum value, that's 37 million. We divide it by the total volume in the last 30 seconds over 26,000. And we get the settlement price, 1,400.25 on this day whenever I pulled this up. So this is an example of how they pull settlement price. And as we can see over here on the S&P, like the last trade on my chart, the close was 1588, but the settlement was actually 1587.75. That's not a big difference. That's a tick. Sometimes it's points, sometimes it's exact, and sometimes it can vary. And so we can check out the NASDAQ. Looks like today that one was pretty close right there. So we got to close right there. So right on the money on the NASDAQ. If we go over, we can check out the Dow. So the one that did fill its gap right away, it actually had a last trade a little bit lower than the settlement price. So any one of those numbers would work. When I'm trading gaps, I target settlement. But if I see last trade price was closer, a lot of times I may target that, if that makes sense. So I'm sort of wanting that closest mark I can get. But what I don't want to have is settlement up, or last trade up here, settlement down here, And, I'm waiting to get up here, and then I miss out on the gap fill. So, because I don't take my profit on the trade. And you can go through, you can even find this information over on the CME's website. I'll show you where that's at. Right here. If you go to cmegroup.com, again, that's cmegroup.com, and we can pull up under product. So at Globex, we'll say I go equity indices, and then we can scroll down, and we'll choose, say, the E-mini S&P. And then you go over to this link right here, settlements. So on settlements, it'll actually give you the settlement price for each contract that settled on that day, and I think they give you like a week back. So yeah, so you have a few days back right here where you can see each one of the trades. So I can look at, previous day, and it'll show like last trade, 1583.75. Settlement, 1582.75. So, on Wednesday there is actually 1 point between the actual very last trade that happened and the settlement price. And then we go on over here to Tuesday, and let's see, we can see 1563.25. It settled at the exact same price. And on Monday, 1560.75, and it settled right there at 1559.25. So you had 1.5 points difference between settlement and last. So if you were doing a gap fill going long, you'd be waiting for another 1.5 to actually try to get a gap fill versus basing it accurately on the settlement prices. And make that really easy for you. One of the things that I do is inside, and I also use it as one of the major deviation levels because it's a major level when you are trading, is inside the diagnostic analyzer, we actually post the settlement price as one of our deviations. And so you can go over here, you can go into diagnostic deviations, and there's a link right here to see the current day's levels. And if you scroll down, then you'll actually see the levels. We even have them specific for contract month, for futures, the major indices right there, the S&P, NASDAQ, Russell, Dow, and, oil, gold, silver, copper, and even the FX over on the CME futures. And then we tie those levels into, of course, the Nadex products. For most of the Nadex markets, the ones that I can get accurate implied volatility from an exchange for. So that's why I don't have like Euro Yen and Pound Yen. It's also why I don't have the Nikkei FTSE and DAX, because the data feed I use doesn't provide me accurate option pricing that's exchange based on those products. And I don't want to get over the counter because I don't want to get some market maker's idea of hitting a button to determine what implied volatility is going to be, because they can change that at any time if they're a market maker. I'd rather get the entire exchange's viewpoint on how far they say the market's going to move, because then it's how far does the market say the market's going to move, not how far do I say, not how far does one other guy say, not how far does yesterday's historical prices that gave me pivot points and ATR say, but how far does the actual market as a whole, as built into the option pricing, putting their money where their mouth is, how far do they say it's going to move? And that number, again, is called implied volatility. So implied means expected, volatility means movement. We pulled that implied volatility number out of, so a big long math formula, pull that implied volatility number out of the underlying market options, and then we weight it based on what the expiration is, and we pull several of those, and we come up with a volatility index. We then tie that volatility index into a deviation formula that's designed for day trading, and this is really a day trading method. And I am working on an extended one for 5 days for more of a swing trader format type. So that will come, really that's the third stage. The next stage I'm working on right now is actually making it where we can tie in 3,000 stocks, ETFs, and indices that all have options tied to them, and where we can tie in 40 other futures markets. Once that's done, then we'll add in extending it out to make it a 5-day formula, possibly making a 30-day formula as well. But I want it to be as accurate as possible. And right now, this formula, it can actually, the one I use for this does work for up to 5 days. But, you can't use it for 30 days because it gets way too volatile. So it gets too big. So have to make some modifications to what options we're pulling to get that information. But, so far, so good. Has worked really, really well. Been very pleased with the results. And I think you will too. So check it on out there. And anyway, so if we go over and we can see just how these deviation levels do definitely help us out when determining, where the market's going to go, where it's going to hesitate. And sometimes you see the market going in a run and you're thinking, hey, it's going to take off. Then you realize, wow, it just ran into a brick wall right there at that deviation level. And, sometimes that can be frustrating because I'll see it and I'm like, it's working too well. I want the thing to keep going. But, it's market expectations, so just using that. And we can check out some of these other markets. We're talking about a big mover, a huge mover today. We got gold. Gold broke the bell today, broke the bell curve, and moved on down, actually opened up on the gold market. Let's go ahead and let's pull that back and check out the extended trading hours. But gold, I mean, literally was just flying today. And so we got it right here. And we can see right there, I mean, just how far it moved down. And we go, okay, well, what is a deviation? Because anytime, this only happens maybe a few times a year. It's really, really rare that we're ever going to see something break out of a third deviation level. But it was hesitating right here at 2. And actually, before it hit 2, me and Tommy were on the air this morning. And came down and popped that level, hit 2. And Tom's like, it's going down again. And he actually called. He said 1,500. So go back, check out the Bull Bear Binary Hour. And man, was he on the money right there at 1,500. And so whenever it breaks that bell curve, what do? Okay, because our deviations only go to 3 levels. Well, it's pretty simple. You just go in and go, okay, well, what is one deviation? We actually tell you that right here. So you can see we got gold, we got a deviation mark, okay, 14 points right there on the gold contract. And so what we're going to do is we're going to take basically 14 points minus 1522. So I can go in here and I can go over here to 1522.8 to be really exact, right? And then I can draw this down, 14 points from there. So 1522 would have 1512, 1508.8. So right there would be the next deviation mark. And so I can draw that on the line right there. And by doing that, and then I could actually do another one where I could go over here and go 14 more points from there. And notice how it came right down to that deviation and stopped. Pulled back and then wanted to keep going. So where's it going to go from there? Well, let's go ahead and draw that 15 points down. So we got 1508, so now we're going to drop on down to 14, what do we got? 1508, 1496.8 there. So 1496.8, and that's if my math is even right. So that looks a little bit small. But anyway, so long day, a lot of trading, a lot of math. Let's pull it up, and if all else fails, we just use a good old calculator. So we started off, let's get it right down to the money. We got 1522.8 minus 14, okay? And so that does put us at 1508.8 right there. And then we'll minus 14 from that again, we'll get 1494.8. So that would actually be a 5th deviation move. So let's draw that one right there, 1494.8 right here. Okay? So by doing that, that's our 5th deviation. And to see it go beyond 5 deviations is really, really rare, but that puts us literally right at the 5th deviation mark. If it were to continue down, you could subtract 14 more points. But if we actually look at where it settled at, okay, 130, all right, remember gold, the pit closes at 130. And the closing price right there is 1,500.9. So just above, literally just above that deviation level there. Actually, if we go full 14, there we go. So right there, and I can even draw a vertical line on that. I can add it to each one of these levels to make it visually easy for me to see the deviation levels. This is how you can draw them also using our charts right there. So we got 4 deviations, 5 deviations. It sort of spikes on that, hits it, bounces right back up. Notice it bounces up a full deviation. And this thing, when it was moving insanely fast. So, I mean, we were watching the gold bounce up and down, 5, 10 points. I mean, just over within a minute, just back and forth. And so that's a whole day's volatility in a matter of an hour, over and over and over again. And so anyway, so stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We're checking out a few more things before we wrap up the show for the week. Let's go ahead and look at our currency pairs and the deviations. We got Aussie dollar moving on down to 0.5 right there, and definitely holding strong for pretty much most of the evening and right into the morning, and then decided to, or really the early morning, I guess, to the early afternoon. And then decided to move on down, break down, didn't even pay attention to the 0.7 level at this point. Decided to push on right through, right down there to one deviation, smack through it, basically a big stop run mark right there, and then decided to basically hesitate, pull right back up to the 1 and 0.7 deviation, now using that as a support resistance zone between 0.7 and 1. Pulling on over, looking at the euro dollar, and on the euro dollar we can see right here we had a pretty clean move right there. It is pulling on back up, moved down all the way down to 1 deviation. I mean, it's a solid beeline move, just right down, almost hit it, pulled back, came back up, on just a big whipsaw effect, knocking out pretty much every trader in the market right there. If you're short, they got you out of your trailing stop. If you're long and you decide to buy on this bounce, well, they probably got you out right there. Unless you're trading something like Nadex, that could definitely help you out if you were if you had the right spread where you didn't have to take a stop on that, or if you're trading binaries. Anyway, so basically moved down that one, definitely moved a deviation from the high, and pulling on back up, almost trying to do a gap fill, but looking pretty flat. Not surprised, being a Friday afternoon. And let's roll on over. Let's check out the pound dollar. So they're on pound dollar, so moved on down, really hanging out right here at this 0.5 deviation level. And I've been spending just a lot of time right here, and hasn't broke completely down through it. We'll see if it maintains that, pulls back up by day's end or not. I suspect it's going to more follow the market, but the pits do close here in an hour for the futures FX. We got the dollar Canadian. Dollar Canadian moving on up, moved up, did a perfect one deviation move time and time again. So seeing that happen for us. So moved up there, right there at one deviation. And then if we move on down, we'll check out what else we got. We can go on and look at the USD franc. On the USD franc, we see a move. We got to move up 0.5, down 0.5, add 2 0.5s together, you get 1. So we got a 1 deviation drop from the high right there. And check out that just classic. Rise up, and then we got a little bit of almost a head and shoulders going on. I guess technically, right there you do have head and shoulders. So you got your head, you got your higher left shoulder, your lower right shoulder, and then it breaks below it. And they're like, oh, by the way, let's stop out anybody who traded the head and shoulders, and let's keep going down. So anyways, that's how the markets work. So prepare yourself to not have to take those stops so quick, so easy. And like I said, one of the methods I like to use is if I am going short, I like to use my trailing stop as the bar that closed below the deviation. So let's say you went in and you're doing a reversal. Maybe you went short right here, and you decided to move your trailing stop over here. Well, this is the bar that closed below it. So that's the bar where you're trailing your stop down. And if we go a little bit further, going on down here, haven't quite got below the 0.5. So we haven't moved our stop down yet. And we are on, obviously, Friday on, FX. Probably should be looking to move that stop down pretty soon if you haven't already. They said don't give it back at the end of the day. So just due to timing of the market, I'd be looking to, probably start wrapping that one up. And right there, USD yen, got to move down, solid move down to 1 deviation. Had that same little spike right there on the market open. We had a lot of volatility going on, and that affected a lot of the pairs. When that news came out, again, that's the news. You got to be aware of when the news is happening because you get stuff like this. That's that bus I'm talking about. And but again, we did get the solid deviation move down. And again, you can go back and look at all these other pairs. What happened right here? So yeah, got the news impact, and then bam. So always be aware of that news. Otherwise, it will hit you and take out your stops. So that might be even when you want to hedge off using Nadex to hedge your forks or your future position. I teach you how to do that as well. Hope you have a great day, safe day, great weekend. Stay tuned. I've got another great show coming up for you, and I will see you on Monday.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.